Welcome everybody to Markonomics 101 presents Hoot Loot, the place to be amused, be informed, but never be misled. Be informed first, be amused second. But here we are, we're having a great old time here. It's Cinco de Mayo. We're going to present you today with some amazing charts and also Bitcoin Mysteries Part 2 at the very end. You think the Mysteries Part 1 were weird. Part 2 is even weirder. Today's show is called the Art of Charting the Weight of the Evidence. And what we're going to do is we're going to focus on three themes that are major themes right now, that if you do not comprehend those themes and if you do not see that these themes are building in a major way, I suggest that you kind of listen here, because the market is sending a message. With that, please like and subscribe. We've got them down here, and we'll be right back with the charts. Well, welcome back. We're going to take a look at the charts, and we're going to start off with the two canaries in the coal mine. One, of course, being Bitcoin, which we're going to find out a lot of weird things about. I hope they don't shock you. But in any event, Bitcoin has broken down from an ascending wedge. It has bounced up. So, right now, I would say that, it's not for sure broken down. It could make a higher high. I don't think so. Usually after an ascending wedge like that, it's very rare that that an asset can go down 25% and stay in a parabolic uptrend. But we'll see. I mean, this one is anyone's guess as to where it will go. Tesla, the other canary in the coal mine. Well, Elon, your company is leading on the way down, and as you can see here, Tesla is in a bear flag. We've been talking about this, that this augured very poorly for the overall NASDAQ, and sure as hell does. It's right about to break that bear flag on the downside. When it does, look for the market to start accelerating on the downside, at least the tech sector. That's one of the themes today. The Dow Jones Industrials, we have, again, an ascending wedge within an ascending wedge, and it still keeps going up. Now, today, the Dow, I'm going to sort of highlight it today. It didn't make a new high, but it's still in a sideways consolidation pattern. There's a lot of weakness today in the market, and the Dow just has a couple companies that just keep going up, and that's pretty much inflation-oriented companies and companies which are related to the consumer spending and all that stimulus out there that seems to go to everybody but me. The NASDAQ 100, here we've got, again, a 2-hour chart, and what you see is it broke down above that blue shelf. Well, right now, the NASDAQ, I'm gonna take a guess here that the bell has rung. And, there's a saying that nobody rings the bell at the top. Well, I'm gonna take a chance. Ding, ding. I think this is the top to the NASDAQ right here. I'm gonna say that. Hopefully I'm right, but ding, ding. All right. The NASDAQ 100, this is a year chart right here. As you'll see, it made a slightly higher high, but not really. And it's already curled over and started on the way down. We're going to see some of the individual issues, and that's going to tell you about the weight of the evidence right there. S&P 500 also has broken down from an ascending wedge, and even though it's at the top of its trend channel, this is not a good particular break. So we're going to have to watch this, and it's full of the NASDAQ 100 heavily capitalized issues. So this one could go down in a hurry. The S&P Small Cap 600, also in a bear flag. I'm going to say that this one is also going to break down pretty quickly. I don't see this thing going to a new high either. I think it's already made its high. The U.S. dollar is critical to everything. We talk about inflation as being sort of one of the main themes of the market, and the evidence is really, really strong right now. It's strong to everybody but the Federal Reserve. They're arguing amongst themselves. Janet Yellen yesterday said something about raising interest rates, and then all of a sudden had to, forcibly retract it, because God forbid we should acknowledge what's actually happening in this country. Let's pretend nothing's going on that's bad. The CRB index of commodities, again, this is so interesting because what it shows is the stair-step pattern of how markets move, and this one is just on a tear, making new highs. It's over 100% year over year, and if this thing does not tell you that inflation is on its way in a big hurry and in like a tsunami, I don't know what else is going to tell you that, because if you don't see it coming, you're going to be like Sodom and Gomorrah, and you're going to turn around and look and all of a sudden turn into a cube. All right. Um, Crude oil, this one's also now going to new highs. Now, what's interesting here is that I've mentioned that crude oil, the economics might start to change because right now the dollar, I think, is even weaker. And I think crude oil is going up against the dollar. In other words, it's not so much that crude oil is going up, it's the dollar's going down, and that things denominated in dollars are going up in price as opposed to the dollar index, which is compared against other currencies like the euro, which are also crappy, and fiat currencies and pieces of paper and pieces of you know what. Um, Unleaded gasoline, new high right here, still in a healthy uptrend. People, I guess Lyft has had good numbers. They announced yesterday they're almost break even. Yeah, right. Um, Copper miners right here again. This thing looks like it's ready to go for yet another gallop ahead. We're seeing it in home building. We're seeing it in everything. Almost every input component is gone up in price, and what hasn't gone up is wages. That's cited by some as a good thing. What that means is that people are not getting paid more, but they're having to pay more. Oh, that's really good. I'm so happy that you people at the Fed are happy that all these people not making much money are having to spend it on even higher priced goods. That's really, really empathetic of you. The Invesco Agriculture Fund, here's a place. I mean, after all, people have to eat, and this thing is just going through the roof. Just about every company out there that is making food products, that is making key ingredients, is having bottlenecks, shortages, import problems. That's why our ports are clogged right now. It's because we're importing a lot of goods, we're not producing a lot of goods, and we have a lot of dollars chasing fewer goods. And I'll tell you this: that's why we saw the the trade balance the highest negative number it ever was, because people have a hole burning in their pocket right now with all this stimulus money, except me. I never get stimulus checks. Okay, I'm gonna calm down. My shrink says, blood pressure. Om. Okay, here we go. The base metals fund, again, everything's going up in price. I don't even need to tell you. Even the cost of change is going up in price. Here, you want a nickel? They'll cost you 10 cents. But right now there is so much evidence that things are getting out of control, and that the Fed is getting out of control, and they can no longer cover it up by lying or misrepresenting the truth. And yes, they do. They do lie. They tell you inflation's at 2% because their algorithm says 2%, but they don't spend 2% more than they did last year. You and I are spending probably 8 to 10% more than last year if we're like the average person, at least 6. And they're basically pretending it's 2 so that they could feel good about giving you 1.7 in a 10-year treasury. Oh, joy. Um, Palladium, another one. The metals are going crazy. Any input into production, anything of finite supply, is going crazy because the dollars are not a finite supply. They're of infinite supply, and that's what we're being shown right now. They're going to be sprayed all over the place until they have no value whatsoever except as toilet paper, which is going to run out anyway because it's one of the things that'll be the first to have shortages of. But here's the good part. When they print all those dollars, you'll have toilet paper. Gold is something that ought to have been doing better. It's not. Again, I want to emphasize here that gold has been in a long bull-like flag, but it's bounced off of that flag so many times that I wouldn't be too interested here yet. It also has critical support at 1680. If it breaks that, it could go down a long ways. And I still will say I don't understand this, because this, if anything, it's in limited supply. It's not it's it's actually tangible. It has uses, and why it's going down is beyond me. Silver, maybe going sideways. This one is more likely to break up at some point, but this thing has gone nowhere for months and months and months and months. 30 and 22, 30 and 22. 10-year Treasury yields have maintained above the 1.55 level, and as I mentioned, that these things are just taking a pause right here. There is no way with these kind of inflation numbers that are coming through that we're going to see 10-year Treasuries as low as 1.7. For sure, they're on their way to a lot higher number. And right now the argument is inflation is transitory. That means it's just going to kind of come and go. Well, no, I don't think so. When it's the hardest damn thing to get rid of. I lived through the 70s. I'm that old. I'm as old as the dirt. And I'm going to tell you this: it was horrible. Shortages, wage freezes and all that kind of stuff, and lines at gas stations, and just complete mismanagement. And that's what we're looking at again. 30-year treasuries, these are going to go a lot higher too. These things are only at 2.2. That's where they are basically, where they have support. Uh, Believe it or not, the U.S. 30-year Treasury is one of one of the five highest yielding industrial bonds, or sovereign bonds in the entire world. I mean, Brazil's are higher, but that's about it. Brazil, basically, we have the highest yielding, and it's still only 2.2%. So once you start getting to normalization, and it's going to happen, normalization is going to mean a hell of an adjustment. Now, one of the things I want to do here is look at the weight of the evidence as it applies to things like the NASDAQ. And these are the companies with the most amount of weight. One of them is Apple, and I've talked about Apple as being in a giant bear flag. It is, okay? It has a great earnings report, but look at how it curled over, and it's about to break its bear flag. Now, it also is a head and shoulders pattern, and what it goes to show is that people buy in anticipation. And by the time the news is out, it's already too late. So this thing has been churning and churning and churning and churning, and right now doesn't look too good. I'd give it a minus. Amazon, it had a great earnings report. Looked like it was going to break out. Went all the way up to 35.50 for the second time in 10 months, and look at it, turned on a dime and has gone down a couple hundred points since. Amazon, all these people that were waiting and waiting and waiting for something good got tired of it, finally sold it. And if this thing should break the lower bound there at 2,900, everybody above it is now in the red, and that's going to cause a dynamic that's not going to be real good. So all the great news is in on Amazon in all likelihood, and what's not in is that you've got higher interest rates coming and higher inflation, and it's going to be tougher for a company like this to operate in an environment like that. Facebook continues to have a good chart, much to my chagrin, because I can't stand the censorship. But I'll live with it. But I got to tell you, in all honesty, it's looking pretty good. A little bit of a breakdown last couple of days. This could have been an exhaustion move. We'll see. But this has been by far the strongest of the big heavyweight mega cap companies right here. Google has also started to break down just a little bit. I'd maybe call it slightly neutral. So we're looking at like 2 plus 1, maybe a neutral so far. Microsoft, possibly bearish here because this thing it went up, had great earnings, and all of a sudden has just kerplunked. And with the announcement that Bill and Melinda Gates are divorcing, I'm wondering who gets the who gets the official Antichrist medallion between the two of them. But in any event, you had an ascending flag, and this thing just got ahead of itself, and that's all there was to it. It still cranks out really, really good stuff, and but right now it's starting to actually fall apart, and all of the exhaustion buyers are gone. Same with Netflix. It's now made a new lower low. When it missed earnings, you saw that big gap there, and now it's made a lower low. And my guess would be it will go below the support level at 470, and it will be in a firm downtrend. And with that kind of a sideways trend, that kind of a topping pattern, these are major tops. I mean, these are not minor tops. These are likely major tops. So you're pretty much you're looking at a generational type of top here. You're not looking at something that's going to go down 50 points and come back. It might. I mean, it might bounce at 50 points, but it's on its way down. And interest rates are on their way up. And that's all there is to it. The economy is cooking. The 3 themes today were shown. Okay, Qualcomm, you look at this beautiful pattern. We've shown you this in the past. A rounded top followed by a bear flag. That's exactly, drawn in here perfectly. Hopefully you recognize the patterns from the prior times that we've actually introduced them. And Qualcomm's about to break, the bear flag on the downside. So that's another one that's going to be charging on down. So what you're seeing here is more companies acting badly. That's how the weight of the evidence is tipped toward the bearish side on the tech companies in the NASDAQ. Now, on the other hand, the economy is cooking. Now, we showed you inflation cooking, we showed you the NASDAQ not cooking, and now we're going to show you the parts of the economy that are. What's happened right now is with all that stimulus funding, none of which I have, of course, what you have is that people are just spending like crazy. They think it's just money grows on trees. I don't know, or it's made in a printing press, and that they obviously realize that. But the bank index continues to go up. Broker dealer index coming to the apex of a ascending wedge. I'm still going to guess that this thing's coming down. There's only so much capital left in these markets. Boeing, here's a company right here that broke out, and look, it broke down, and we mentioned about support resistance areas. Remember, 230 was kind of like what was sort of like a center of gravity that would go above and beyond and bounce off of, and you had to look for which way it went permanently off of 230. Well, it looks like it's breaking down, and so that was kind of the point you needed to watch, and before you decided that this thing is breaking down. To me, it looks like right now like it is. CVS Health, the exact opposite. I would have guessed, and I did guess, as a matter of fact, last week, that it was an ascending wedge and it was probably likely to break down. Well, I think I was wrong, and this is why none of this is about a perfect science. There's an art here, and what we're seeing is evidence of a absolutely cooking economy with bottlenecks. And people are spending money at places like CVS and stuff like that. And we're seeing, again, retail come back because the money's there, the products aren't there. That's the thing. The money's there, but the products aren't there. And if you think about that, think about how dumb that is. Okay, you give people money to spend on products that don't exist. All they do is drive up the price of the products and hoard the products and make them in short supply so that no one can get the products. Meanwhile, you've created an inflationary spiral with interest rates going higher. Okay, that's what we're doing. That is what our Federal Reserve is now doing here and denying it the entire time. How they're going to get out of this is anyone's guess, but it ain't going to be pretty, and they ain't going to be having a good time, because right now the market's calling them on it. I'm calling them on it. Other people are calling them on it, and they have got to come clean. So Dow Holdings, again, another infrastructure company. Here's another economy cooking company, okay? This is a major industrial type of company locally, will benefit from government spending, and the economy's cooking. Discover Financial, wouldn't have believed it. Credit card company broken up, stimulus checks all over the place. And again, people are spending money. I don't know that that's a good thing, but especially because we're not producing more. FedEx, look at that. I didn't think so. I didn't think this was going to happen, but it broke out to a new high. That tells you that the economy's cooking, and that any thought that it's slowing down like right now is not happening. Okay, so we're not going to have just a burst. There's going to be, I think the economy is going to continue to cook, is what it looks like to me, because it doesn't look like these are breakouts. So it looks like the economy has a little bit of legs to go, but nonetheless, just because our output goes up just a bit, a lot of this could be price. They could be earning more earnings simply because of inflation. So I don't know that these are necessarily indicative of good, healthy movements. UPS, another one. Look at that breakout from a sideways consolidation. They obviously are getting those packages right. Not at my house, unfortunately. Ace doesn't like them at all because they always mix up all the addresses. But UPS is looking awfully, awfully good. And again, this is suggesting economy. The three things you got to understand: economy cooking, inflation cooking, tech rolling over and pulling the rest of the market down. That's kind of the summation for today, and the education today, and how you could tell by look at the weight of the evidence with the charts. We'll be back in 1 second with Bitcoin mysteries, and you're not going to believe this second set. So we will see you in just a second. Okay, well, we're back with more of the Bitcoin mysteries. Last week we talked to you about a couple of them that should have gotten you thinking. For example, no founder, no one claiming credit for it. Who runs the thing is what I'd like to know. I mean, for example, if you Google Ethereum president, you get somebody. There's a president of Ripple Labs that Ripple Labs produces the tokens. So there's an individual, and those are small by comparison to Bitcoin. There is no one associated with it. Are we to believe that Craig Wright, who claims that he made but wants nothing to do with it, just made it one day, let it run on its own, and all of a sudden all these people got involved in it and created a $2 trillion enterprise? Is that what we're to believe? I don't see that that's even possible. The other thing is that is that Bitcoin, if you don't even know what you own when you own Bitcoin, most people would say it's a form of currency, it's digital currency. It's not. Okay, for something to be a currency, it has to be a medium of exchange. It's not a factor in e-commerce. No one uses Bitcoin to buy or sell anything. The only thing Bitcoin is used for is a medium of speculation. That's all it is. Okay, so it's a medium of speculation. If it is a medium of speculation, then you got to ask yourself the question: okay, what am I speculating on? Seriously, what am I speculating on? What is going to happen here that is going to make this more valuable? And if most people cannot answer that, what they're speculating on is there's a greater fool. And I've told you I've been that greater fool. It's no fun to be a greater fool, but basically that's what you're speculating on. Somebody will come and pay more. Okay, I mean, that's simple as that. I mean, Elon Musk, when he bought his Bitcoins, he wasn't keeping them there to make change. You don't make change in Bitcoins. They're sold in fractions and they don't really exist tangibly anyway. So, again, I don't really understand that. So Bitcoin has no figurehead, yet it has since 2010 been allowed to just operate on its own, no one in charge of it, no one making decisions, all kinds of mystery like that, exchanges getting hacked, all kinds of stuff like that. We don't even know how many Bitcoins there are. We also don't even know who this Craig Wright sold the original Bitcoin to. I wonder about that. If I had bought the original Bitcoin, I would come forward and say something. Yeah, Craig sold them to me. I thought it was a great idea. I sold them, of course, but I didn't hold on to them. No one claims any knowledge of owning the original Bitcoin. All I saw was something in Wikipedia talking about one holder who used 50,000 Bitcoin to buy a pizza. That was probably the last time it was used for commerce, and that's when it had no value. But how on earth did this thing get disseminated in the first place? And if this guy really doesn't care about it, how did he set it up so that it continues to run? It continues to run with no management, no corporation, no establishment, all of that. So we'll have more mysteries next week. But I mean, I want you to know this thing is not exactly what it appears to be, and it is different than what you're seeing out there in other cryptocurrencies. And so, be aware. Be careful, be informed, be amused, never be misled. We're here to inform you and never mislead you and to tell you what we need to, even though sometimes the message you don't like. So if you'd like and subscribe, they're right down here, and we can't wait to see you next Saturday for the wrap-up show.